Most people in crypto lose money, and this is no mystery. But not because they're bad traders. It's because they're playing the game completely wrong. You don't need 100 indicators. You don't need a $10,000 monitor setup. You just need a few simple strategies that actually work. So today, we're going to go over the 5 rules for maximizing your gains for this next crypto cycle. The first rule is one of the most important, and that is manage risk. This is everything. This is the one rule that will save your portfolio the most. It's not that winning traders win more trades, they just lose less. It's so important to go into these projects or any investment and managing the risk that you take. You never want to bet the house or your kidney on the latest meme coin that you found. And it's so important to not risk more than between 2 and 5% of your portfolio on a single trade. That way, if you do make a bad trade, you still have plenty of room to make some good ones. The second biggest rule is managing emotions. Now, this is a really hard one for everybody. That's because fear in the markets will make people sell a project early before it's reached its full potential. And greed in the markets will make people hold on to a project way longer than they probably should have, which would have given them an opportunity to sell for profits. If you don't have a plan, you're basically guaranteed to lose. I'm talking things like stop losses, take profits, and paying attention to support levels, resistance levels, and finding good entries. This next rule is a big one. Identify winning projects. If you really want to make money in crypto, you're not going to do it through short-term flipping, and especially not meme coins. While it is possible to get lucky and get into a good project, the odds are very, very unlikely. You need to stop thinking about short-term positions and thinking about long-term narratives. The solution to this is coming up with a plan for every single one of your trades. This is identifying winning projects in areas like DeFi, AI, real-world assets, and supply chain, just to name a few. If you accumulate strong projects that are going to be around the next 5 to 10 years, time will do all the work for you, and this is where the real money is made. Rule number 4 is a little controversial, but I still think it's really important, so I'm going to include it anyway. Learn how to use AI. Artificial intelligence is not in its infancy anymore. It is changing the game as far as trading, and AI is being adopted worldwide by some of the biggest companies in the world and especially traders. Recent reports show that AI could make up as much as 50% of the trading activity on markets. This means that if you're not using AI, you're at a serious disadvantage. AI uses something called predictive analysis. It allows it to index vast amounts of data instantaneously. This lets it access historical data and trends to identify where the markets are going to move next. This means bots are much better equipped to make smart trades and completely remove emotion out of the equation. They are programmed to make informed decisions based on your parameters, and this means more successful trades. It also uses something called sentiment analysis, which just analyzes social media and news articles and other relevant information that could affect prices. This is really important, especially with how volatile crypto can be. Learning how to use these AI tools can completely change your trading experience. Platforms like OpenClaw can connect to different AI platforms like Anthropic or ChatGPT, which then can access trading platforms like Simmer, giving them access to many different popular trading markets like Kalshi and Polymarket. It's important to understand these AI agents aren't doing anything special. They're just automating what you tell them to do. This means that they will do exactly what they're told to do while you're sleeping, completely removing the human element out of trading and just sticking to the data. Now, the last rule I think is the most important because it ties back to all the other rules we talked about, and that is never stop learning. The crypto space is always changing. Staying up to date on market trends, news, and updates from your favorite project is essential to investing. Whether you're listening to webinars, reading articles, or watching YouTube videos, gathering information is the most important thing you can do. This ties back into all of our other rules because the more you're educated, the more that you can manage things like risk, your emotions while trading. It can also help you identify winning projects, learn more about helpful tools like AI, and what projects you should be getting into. Part of the reason we've managed to be so successful is we're part of a Web3 community that constantly shares ideas and new projects with each other. This creates a hive mind of investors that are constantly looking for winning opportunities. And if you guys want to learn more about crypto or AI or any of the other things that we talked about today, definitely join the Discord. Our community has been around for about 5 years now, and we have seen everything in crypto. So if you're looking for a new group of people to get involved with and learn a little bit more about this exciting new industry, hop in. It's free to join, and we really appreciate all of our members that come out for the live stream and our weekly giveaway events. So thank you guys for everyone watching, and we'll see you for the next video.